Welcome to today's video. In today's video, I'm going to be giving you a trade breakdown on this trade right here. As you can see, this was a very clean buy taken on the Nasdaq. And yeah, it was about a 2 risk reward ratio. This made me just over $4,700. I took this on one of my Lucid accounts and then copy traded it across 4, making just over $1,000 on each one. So yeah, pretty good day in the market today. I'm going to be breaking down this trade, my exact confluences, and this is pretty textbook for me. This wasn't a extremely complicated trade, let's just say. So let me break it down for you. The first thing we're going to do is head over to the hourly time frame. Now, market has dumped. I'm filming this video at 7:24. This trade was taken around 4 or 5 hours ago. So the market has dumped since, but this was a buy position. Now, looking at the hourly time frame, I can see that we're definitely in an absolutely ridiculous uptrend, right? We're expanding, retesting, expanding, retesting, and we're just pushing higher and higher and higher. Now, one thing about trading that you need to understand if you want to see consistent results is the trend is your friend. You need to follow the trend. Now, the daily time frame, same thing, extremely bullish. The 4-hour time frame, same thing, extremely bullish. The hourly time frame, as you can see, higher and higher and higher. And by the way, this goes for both the Nasdaq and the S&P 500. As you can see, the S&P 500 flying as well. Okay. Now let's go back over to the Nasdaq, and this is when we're going to get into the juicy stuff, right? We're going to go to the entry model in itself. This was the model that I used to execute this trade. Now, what did I notice happen? As we can see, market opens right about here. This is market open at 2:30. Now, what I always like to do at market open is I will mark out in pre-market is I will mark out my 5-minute lows. You can see that we have a low right here. You can see that we have a low right here. And you can see that we have a low right here. What I'm waiting to see is these lows getting swept out, because we need to gather liquidity if we want to continue upwards, right? Think about, what's underneath these lows. It's liquidity. It's resting orders that need to be grabbed, need to be filled in order for us to have the momentum to make that push towards our take profit, which in this case was through this buy position. Now, market open, and straight away we can see that we came down and we took out this 5-minute low. Now, you'll notice I have this thing right here. Now, what is this? This is an indicator or an indication that we do have a bullish SMT. So let's head over to the other index, which is the S&P 500. It's just loading in. Let's head over to market open, and what can we see? What can we see? Well, market open is at 2:30. So market opens just here, and we can see that price came down and we took out this low right here. This low right here, I'm going to make it very, very clear with this trend line. We can see that right there is a low and a lower low. This low is formed at 11:10, 10 past 11. Let's see what time this low is formed at. 11:10. And as you can see, this low has not been swept out. So that right there is a bullish SMT. As soon as I see a bullish SMT, I'm thinking amazing. This means we are going to go higher. Now, did we sweep out any session lows at all? No, not on the Nasdaq, but on the S&P 500. No, we didn't. So I was just checking to see if we swept out any session lows, but we didn't. But that's completely fine. Anyways, back to the trade. Now, once we got that liquidity sweep, once we got that bullish SMT, I wanted to see a 3-minute inversion. Now, looking at the chart right now, it doesn't look very, very clear because it just looks like a gap, but this is a fair value gap. This right here is an imbalance in price. So that right there is a perfect example of what a fair value gap is. Just an imbalance in the market. And as you can see, we formed this on the 3-minute time frame. Now, what I wanted to see to confirm that we were going to the upside is an inverse fair value gap. And yeah, we got this lovely inverse fair value gap on the 1-minute time frame. Now, I could have entered there. I could have, there was a good setup. That was an inverse fair value gap. We had a bullish SMT. We had a liquidity sweep. There were so many reasons why we should go up, but I had to wait for a retest and a rejection. Now, this is where I drop down to the 1-minute time frame, and I'm thinking to myself, right, I need to see a retest and a rejection of a fair value gap to confirm to me that we are going higher. And as you can see, we have this fair value gap right here. Price comes up, Price comes down, retests it, rejects, and bang. This is exactly where we entered in our position. Now, because we were at all-time highs, I wasn't looking to target liquidity. I simply just looked to target a fixed risk to reward of a 1 to 2 because that's what I needed to make the amount that I needed to make, and bang. This trade ended up going straight to TP, zero drawdown. This is exactly what we love to see. Now, you're probably wondering, well, where did you set your stop loss? Could you let us know? The answer to that question is I set my stop loss just underneath a fair value gap. Now, in this case, we have this bearish 3-minute fair value gap. I had my stop loss set just underneath that. Did we have any 5 minutes? Yes, we did. We had a 5-minute fair value gap resting just there as well. So that was why my stop loss was down there, so that it was protected, because if price wanted to come down, we would have retested, rejected out of that fair value gap, and my stop loss would have been protected. But yeah, this right here, perfect example of the entry model that I use on a regular basis. It played out perfectly, made just under $5,000. Quick, easy, simple trade. And what did we learn from this? Well, we learned that the trend is your friend. If you follow what the market is telling you to do, you're always going to see greater results. One of the things that I used to always do that would kill me, it would absolutely finish me, was I used to doubt the market. I used to doubt the trend. I used to see, well, we've been bullish for 14 days straight. Are we going to get that retracement? And that fear of waiting for that retracement and not trying to get caught out on buys is what made me miss out on so many days where I could have just taken a lovely buy setup like this and seen it play out. So that's what you need to understand. The overall bias is your friend. We're at all-time high conditions, but we are pushing until the market tells us, or until we can see clear signs that it wants to reverse. I'm going to keep on taking buys. Now, when it does want to make that massive correction, well, that's where I can use my market analysis, I can use my expertise, I can use my discretion, I can use my experience to decide, okay, maybe now I'll look for some counter trend sells. But as of right now, we haven't been given that at all. Look at the daily, look at the 4 hour. We haven't been given a single indication that we are weakening. And that's exactly why you've got to go with what the market is telling you. And that is why this trade today made me some good money. If you want to see more trade recaps, let me know in the comment section. If this video helped you out, let me know as well. Drop it a little like, drop a little sub if you're not subscribed, and I will catch you in the next video. Peace.